Welcome to the Rate Corner. I'm James Lowen of Lowen Group Mortgages. We have a big announcement coming up, of course, on March the 8th. Thursday is the decision from Jim Flaherty and the Bank of Canada as to where variable rates will be moving. Let's take a look at this as we look over the schedule of key announcements to be on March the 8th. We take a look, as always we like to, the first indicator is inflation. We can take a look over in this operational guide, and we like to look, of course, at the core CPI. This being taking out a lot of inflationary things and highly volatile things, gas, food prices, oil, anything that's really highly volatile. We can see that the core CPI is still operating at 2.1, well within the band line, so not too much pressure from an inflationary point of view. That means that Canadians are not overly spending more than they truly should on consumer goods. Let's take a look at the second key indicator that we like. That's unemployment. Canada's unemployment level, we can see from December, we always expect to be slightly lower in December, has actually started rising, and in January it's hit a new high at 7.6 for the last 6 months, which is not really very much a good thing for a Canadian economy. It certainly does not indicate towards Canadians having the money to have higher interest rates and supporting that for our economy. So this presents a little bit of an issue, as Jim Flaherty just recently stated in an article that he is a little concerned in regards to the condo market and the mortgage market in the Canadian economy. He met with some private sector economists for this, and he always does this right before his budget. What he might take a look at then, since he cannot take a look, since we do have unemployment going higher, since we do have inflationary not really giving us pressure, instead of actually increasing rates on mortgages, he might take to look and make it actually harder for Canadians to get a mortgage simply by making the rules tougher. So what could you do in that regard? Well, we know we've gone from 40 down to 35 down to 30. He could potentially take it down to 25 years to qualify for a mortgage, making it that much harder. The other thing that's been tossed around is being making the minimum down payment 10% from 5%. I have a hard time swallowing that he would do that. I do not expect that to be a realization. I think that'd be scrapped. So if anything, potentially having a 25-year amortization. So where are we expecting then for the next rate announcement to be? We don't have any change. And I think we'll find that Flaherty will keep it the same throughout most of 2012. This has been James Lowen for Lowen Group Mortgages. I will speak to you next time. The schedule of announcements for April the 17th. Thank you so much.